Ngozi, thanks so much for joining us this morning.
Thank you.
All right, so it's definitely a difficult environment. Can you just reflect on the big takeaways from the results that were reported? As I mentioned, we have gross premium up significantly, well, almost 25, almost 30%.
Yeah.
And then, of course, we also have very decent investment income as well. What are the big takeaways for you?
For the quarter in particular, we were able to grow our gross written premiums by about 17%, which was a very good performance from our own perspective. In addition, our underwriting profits also grew about 177%.
Yeah.
This is just quarter on quarter. That's 2018 versus 2017. And profits were up about 180%. What I would say is that a lot of the work that we've done since the beginning of the year in terms of improving our underwriting performance, claims management, and focusing a bit more on how to satisfy our customers, we're beginning to see all of these pay off.
Right.
Investment incomes are also up, like you mentioned, but what we're extremely excited about for 2018 is the fact that a lot of the earnings are from the core performance, the underwriting performance.
Right.
We've done a lot to improve our processes and the way in which we're doing the underwriting, ensuring that we're pricing correctly, we're taking feedback from our customers, and all of this has resulted in the strong performance that you've mentioned.
I imagine that underwriting income is really driven by, if you like, the big ticket transactions, the large corporates, but you also invested in the retail segment. How is that performing?
Well, the retail market is still challenged, that's the truth. Inflation is still double digits, even though it's coming down, from where it was at the beginning of the year. So there's still some struggle there. The motor business is not growing, and not just for us. The market, the business has been shrinking over the last 5 years, at the minimum. So we're still seeing some struggle there, but we're seeing some traction with the non-motor side, so like travel, householder policies, and for the retail P&C business, as a retail non-life business, we've seen like 2% growth. So it's slow, but we are seeing some positives, and we haven't given up. It's still an area where we think, we can make profit in the long run, and where we continue to invest.
The business is quite diversified now. So we just mentioned the retail business,
yes.
but you also invested in the pensions,
yes.
the PFA company. Over the next 5 years, how would you describe the outlook for this business? Would you be looking to invest in new businesses, or is it more a consolidation phase that you're going into here?
So broadly speaking, like you said, we have a pension business, we have an HMO, we have an asset management business, and even within the insurance space, we're doing both non-life as well as life. So we feel like at this point we've invested in the spectrum more or less of areas where we will invest so far. Within the next 5 years, we would definitely consider whether there are other areas that we can play, if there are things developing within the market. But one of the key things for us is to still consolidate our position. Insurance penetration is still extremely low, and we feel like there's still a lot, that can happen within the insurance space, even within the health space. We still see a lot of opportunities for growth and development. So we will also we'll be ensuring that we're consolidating, and of course looking forward to other opportunities that may come up.
But as you take stocks, that retail business, which you mentioned clearly that is quite challenged,
yes.
is that something that you may want to reconsider going forward in terms of perhaps divesting from that if it's not a high revenue earner going forward? Or do you anticipate a recovery in the consumer story in Nigeria, and as a result, you want to weather the storm and stick in that business?
I would say definitely that, we would weather the storm. The retail business, we see a long-term view. We're not just focused on the short or the medium term for this business. We think that on the long run, the business will definitely grow. We have a huge population of, say, 180 million, Nigerians, and all of these people definitely need some form of insurance. The life insurance, covering them after death, and ensuring that their children are able to go to school, even if they lose their jobs. And also there is still a lot of opportunity within the retail space, and it's somewhere that we are focused on ensuring that we continue to push through and run a successful business in this area also.
Later on in the program, we're going to be focusing on fintechs in Nigeria, and I was just wondering to what extent technology is playing a role in how you are improving your market penetration and growing your market share. What's your, if you like, relationship with the fintechs, and to what extent are they involved in the growth of your business?
Well, I think, like you said, there is no, company that, can continue to grow and, gain strides without applying technology. We're doing, a bit within the digital space in terms of, how we are improving our interactions with our customers, whether on the health space and also even on the insurance side of the business. We're trying to come up with, new products that, that our customers can relate to, which they can, almost completely online, instead of just the offline methods of, relating with them. So it's an area that we see that is growing and developing. And of course, the plan for us is continue to invest, within this space and ensure that, we are better able to interact more even with our customers as we go along.
And looking at the fourth quarter, as it evolves, the economy, the growth story is still quite slow. And I just want to get your thoughts on your expectations for the fourth quarter. I see, for instance, that net claims for year to date, so to speak, the first 9 months, is somewhere around 33%, which is relatively high, even though your net premium income is higher than that figure. Exactly. What can we anticipate in the next 3 months, in your view?
Well, within the next 3 months for us, the plan will be to consolidate, in terms of improve our performance, both from a growth perspective, which already, like you said, we are significantly ahead. From an earnings perspective too, we are focused on improving our performance. The combined ratio for an insurance company, of course, is what tells you whether you're making money from your underwriting business or not. And this is an area where we have started to see improvements in this year. And we expect that even for the remaining 3 months of the year, we'll continue to see further improvements in this area, which will, of course, ensure that our earnings are also improved. Right.
A quick question on diversification outside Nigeria. Is that something that you're looking at? We've seen many of the Nigerian banks go into several African countries. I wonder if this is something that you are considering. We also know that even some of the reinsurance companies are playing in other markets as well.
I would say not in the short term. Nothing can be ruled out in the medium to long term, but it's not an area of focus for us in the short term.
Right. Let's leave it there. Thank you so much for your insight this morning. We've been speaking to Ngozi Ola-Israel, the Chief Financial Officer at AXA Mansard.